Will markets around the world continue to fall? Well, today we talk about market timings. Where do the experts stand and what should we be paying attention to as investors and traders? We'll also be talking about the best sector in the US market. Yes, semiconductors has started to fall, and as we reported last week, it looked like it was going to be a big sell. So far, it has been. The skew is falling, which shows us the bears are still in control of this market for now, and the S&P 500 has filled its most important gap. So join us as we talk stocks, commodities, and cryptos together for the week ahead. Well, welcome back, everybody, to the Daily Show where we talk about markets around the world. We've got the latest macro, leading indicators, and of course, the hottest charts coming your way. But no surprises that we saw a massive sell-off on semiconductors. Once we saw that key big trade, we knew that the low being taken would bring the big flows. And it certainly did, and semiconductors had the worst week in quite some time. If we take a look at the Friday trade, it was really predominantly just a sell-off in one sector and one sector only. Big semis, and of course some of the techs as well did suffer. But the rest of the market was doing pretty well, and we'll talk about that later on. So where do we sit in terms of the rest of the market? We've talked about bullish percentage index as one of our key metrics for showing us that maybe a top or a temporary top was in. When we move below the 70 from above, this tends to lead some of the biggest turns that we've had in the last 2 years. Whether it was April and March of 2022, August, November, or of course February, we tended to see sells in all of those periods. Guess what? We've just had it again. So does this mark a larger sell-off across the board? So let's now take a look at both the bullish and bearish case scenarios in the market right now. First up, smart money versus dumb money, one of our favorite charts when it gets really far apart. And we want to discuss this with the idea of what Goldman Sachs recently mentioned. So they've been talking about net inflows, and we continue to see retail traders buy the dip and bigger traders sell the rips. And you can tell that because each morning we've been opening up, and then of course we've been selling by the end of the close. Now that it could be about to turn based on where we've got the S&P 500, but we'll be looking for potential rallies here to still be sold at this stage. What about investments? Well, average total return year to date has not been good for value investors. The 100 highest yielding stocks average return 3.5% negative, S&P 9.65%, and of course stocks that don't pay dividends, you can see here a massive 20.43%. It just shows you again that when you're coming out of some brutal sell-off in markets such as 2022, don't usually buy value straight away. It's going to be high gamma stocks and of course stocks that are all about the growth, and that tends to always really hold true in most of these broader sell-offs, contrary to what popular belief is. Let's have a look here at forward PE. It's still very high. I haven't updated this chart, but it's sitting at about 9.1 times forward earnings. And speaking of forward earnings, they have been improving, but let's just take a look at an investor mindset into the end of the year. Should you be freaked out? We brought this up a few weeks ago, and it obviously showed us that while we expect weakness in August to October, we do expect strength into the end of the year based on pre-election year cycles. So an investor may not necessarily be too terrified of markets. It also makes sense that we're selling right now because, of course, we've seen so many of these sentiment surveys. We've been looking at this for weeks and months, and it was pretty much the best indicator of 2022. And look at the 19th of July. It marks the actual peak of the NASDAQ. Then we've sold off since. We're still elevated on the bull end, which means that rallies for now could be sold off. And until we get that bear number up, basically above 30+%, it's unlikely we've hit a low. And a lot of that has to do with, some interesting stats that we're going to bring up later on today's show, along with our index discussion. This is just an interesting one. It just shows that the last 2 days were very, very small in terms of the net close for the S&P, plus 0.03, minus 0.11. And when we've gone over 30 years, Wayne's done this, and he's gone over 30 years of data. These are the closest correlations for the week ahead. Now, can you take anything into that? Well, it just really shows you that there are some more lackluster, kind of more 50%-y style things going on. There are some interesting factors that have gone on through this period, but I think the max drawdown is the most interesting. In general, there have been, I would say, around 3 to 4% max drawdowns that occur over these periods of time. It's just a stat, just something we're showing. S&P 500 for quarterly options expirations. Now, I did say I would bring to you what we think for August, but I wasn't able to get the data in time. So what I thought I'd do is just remind everybody of the September stats. Look at the after September OPEC stats. That's the quarterly big options expiration event. 723, very negative for the markets. We'll bring it back up in September, so make sure to subscribe to the channel. But there's a lot to discuss unpacking that event. That's going to be a huge one. So why do we say that this time of year can be weak? Well, pre-election years and also just VIX timings can be very, very high. In fact, we usually see a spike through this period for the VIX. We're seeing that again, although it's being suppressed by what we call zero DTE options and the way that that's hedging off the market. We've already talked about how many of those, that's hit an all-time high now for institutions being able to use it. And then we look at the last 10 pre-election years and we're actually down a bit. We usually bottom with some kind of recovery literally where we are. So think about this. This is about a week old. So we're basically at this point. We usually get a recovery into a sell that brutalizes the end of the month. So it's pointing towards the last week of August being the possible low for markets based on historical stats. Let's go into the biggest options trades and the biggest trades in general volumes. J&J getting a lot of excitement over this peak. I'm not sure whether it's a huge accumulation or a big sell-off just yet, but obviously there's a ton of activity going through that stock, and we'll look at that over this week as we break down some single stocks for you guys later on the show. SSO, this is a 2 times bull S&P 500, big trade down the bottom, possibly looking at a small pickup. Usually bigger traders trade these leveraged funds when they're looking for a short-term move. So, of course, we're getting that huge trade down the bottom that could be pointing towards a little rally at the beginning of this week into the big options expiration. Speaking of rallies, we also have Apple trading at a previously large position, and it's held with wicks kind of purchasing up off the bottoms here. So again, it's kind of showing us that there could be some potential that Apple is about to hold this weekly 20. We also know that Qs got purchased in decent quantities last week, although it did drop lower. There was a dark pool transaction down there. Could be a seller. We don't know yet. But I would say it was probably people selling out of semiconductors in general, because that looks like a terrible market in comparison to others. And then we have things like treasury bonds back and holding on this current short-term support. So will treasuries actually see some reprieve from what's been a pretty brutal year so far? Let's go through most anticipated earnings releases this week. Make sure you also stay tuned for our show where we'll show you the options expected moves. But some of the big movers are going to be things like SEA. We're also going to get some large trades that are coming through from Walmart, Cisco, Target, and a few others. This will be an interesting one to see what the fallout is from that in the earnings report, though I don't think the market's going to be going in super bullish based on the price action. Let's also discuss what's going on with Ford earnings so far. So actually, Ford earnings continue to improve here. And what this is showing us is that really, even though the earnings results are coming through, the market is getting excited about Ford EPS in the future. They could be wrong, but you can see the big difference here between where we were in December of 2022 and where we are right now. Big EPS change, big Ford earnings expectation on the street towards an improved soft landing economy. Are they right? Who knows? We'll figure that out very soon. Let's now take a look at the biggest trades going through in the options market. And I think NVIDIA is clear here. Although it was only 1.81 times 90-day volume, 3.6% negative takes us to a very interesting point for NVIDIA, and we're approaching that 400 bracket very closely. This has now been a fairly brutal sell-off, which you expect with such a large run, and stocks like AVGO or Broadcom also coming with it. Another one that we want to focus on this week is going to be Disney. It was down 3%, which is A-OK considering how much it put on, and that was 2.11% with almost equal call put volumes, a little bit more calls. Usually Disney's been almost predominantly calls across this sell-off. And there's plenty of others getting some big trades here. There's a few casinos and a few other things. And I guess this would be a good time to mention as well, if you're interested in joining us in Vegas, our conference is happening in September, the late September. Jump on over to www.fxevolution.com if you're interested in getting the early bird tickets. We've got some amazing speakers. And some of these guys, they're going to be imparting some serious knowledge. I'll also be talking about something I've never discussed here on the channel, which I think you would very much enjoy. So if you're in the US and you're interested in joining the community, check it out, fxevolution.com. 48% puts, 52% calls, 40 million versus 39.3. Oh, I tell you what, that is getting closer than to the put side. And because this week's massive options expiration, we'll talk about that when we look at maximum pain very soon. Let's go to the 5-day movements of sectors. And it continues to be an energy movement. I mean, energy is getting this huge rally at the moment, which could even go to $90 plus a barrel, which we'll look at soon. But then we've also got healthcare, utilities, and staples. Those tend to be the ones that perform best during a sell-off. So everything is happening as per normal, and semiconductors are getting absolutely brutalized, which is expected. Friday was the same, more of the normal crowd in the top. Gold finally finding some reprieve at the levels we thought about, so we'll look at that soon. Very nice. And of course, semiconductors here, negative 2.51%, so getting sold fairly aggressively. Speaking of charts, let's get into it and discuss the charts for the week ahead. Which ones do we need to be watching? First up, percentage of stocks above 20-day moving average. This is a great one, and you'll notice I've marked here just like a 24-25. In general, when markets start to sell off from a significant point, such as that bullish percent index we saw at the start, we tend to usually move below the 20 moving average. We're looking at around only 25% of the S&P 500 stocks as a whole trading above the 20. Now, that hasn't happened just yet, so of course, I don't know if we're through the sell-off yet, and it would also make sense that the data is saying that we haven't. So, of course, there could be rips into sell still coming. What about yields? This was the thing we thought we'd watch last week. I must admit, I thought we'd move one way or the other, and it was a fizzer. We didn't move anyway. 5.1%, 4.6%. Keep them on your charts. A breakout either way should hopefully hold a sustained trend. Remember, we've been coiling here for a while. So that means that when a market breaks out of a coil, it can get aggressive. And that's going to have impacts onto treasuries. If we break above 5.1, treasuries will go down. If we move, let's just move this for a second. If we go below 4.6, you'd expect treasuries to find a lot of support buying here. And this is a very large point here for treasuries. A lot of people are looking at this towards a trade. I don't like to trade treasuries myself. I do think that this is an interesting investment concept at these levels, which we've talked about before, and we have had some turns. If you look at the weekly low, it looks pretty nasty, and I still could see treasuries going 88.90 in the future, especially if yields start to spike back up. But still, for day traders, they'll be watching that level quite closely. XLY versus XLP, this shows this 1/3 of the US economy kind of on a chart. This is effectively consumer discretionary versus staples. So far this year, it's all been everything looks good. But that's starting to turn. Make sure you mark an alert underneath this little rejection wick here, 2.21. If we get underneath that for this combo, it's showing us we've got maybe a capitulation sell coming that could get a little bit brutal, and then hopefully it turns into a nice little rally into the end of the year. Semiconductors, what's going on there? Well, we got the double top, and we mentioned the big trades in here and the big trades previously, and they were right again. They sold off, and they've been selling semis quite aggressively. Now, I don't know if it's going to continue to sell each and every single day, but at the moment, our expectations were at first to move down to something like a 143.50, and then at second to move down to around a 135. So we want to see basically probably this 135. If that occurs, yes, we're probably going to see further huge selling across S&P, across Qs, across many other things. So while rallies could happen to fill gaps on the way down, I do think at this stage the rallies are met by sells. And remember this key level here around 152.50. That should be where the bears sit on this chart. That's the best sector in the market, so you don't want that thing falling over if you're a bull. Let's look at copper. Bad week close for this. It did that false break about a week ago, and now we're underneath. This is pointing towards copper actually continuing to fall off as the economy in China looks weak and the global economy starts to weaken as well. Demand destruction in place. You know, it's kind of like if you go to all shops now, I bet you a lot of them are starting to offer you deals. Why is that? Well, people aren't purchasing as much. The Fed and central banks' high interest rates are starting to impact these markets the way that they're kind of meant to. S&P 500, and speaking of the Fed, supposedly what we've got in terms of support, we're still very disconnected between central bank liquidity and where the market's at, which points to really we should be coming to some yin-yang harmony in the future for this chart. But we'll talk about the S&P soon. Let's go to oil first. It wasn't a convincing closeout above 82, 83, but It's a long leg doji, high, low, open, close. That usually means indecision. If we do get a new high this week, you'd have to think that we're marking out $90 to $92 a barrel. We also think that at this stage, it's drops being met by rallies unless we get underneath 78.50. So that's really the key here for the markets for oil. It wasn't a super convincing weekly close like we'd hoped, but here was one that was a little bit stronger. Take a look at this. Above all the previous wicks here for the US dollar, big bullish hammer coming off that previous session, closes above. Looks like we're marking out for a 103 to 103.20 range movement now. So dollar's chosen its side, you would think, which is bullish at this stage. Pullbacks to be met by bull demand, and that's kind of like the move we're looking at. Gold was best traded in stocks last week. Specifically, we looked at Barrick, and Barrick did quite nicely. Came down, hit the low, big bullish hammer. Couple of days of bullish move from that, doing much better than the market itself, up 3%, not too bad. And if we move over to the actual metal itself, the metal futures look crappy. That does not look very good on a chart, and we have no turn yet. So it's still short gold as the metal. Gold stock kind of finding a bit of bullish support. It is a partial defensive during the initial sell-off of a market, and we're looking at something like a 1932 breach out to give us any reprieve here in terms of buyers. So at the moment, unfortunately, gold is right at that level where you'd hope buyers recommence, but we haven't seen it yet. Speaking of buyers, Tesla traders, you are happy that it held your weekly close, 240 and above. Nice. So what happens next? Well, this is where it has to rally, isn't it? We get underneath that low now. Ooh, back down to 200 we go. And the daily 200 moving average, which sits right at 200, 210 would be where Tesla moves to next. I'd love to hear some of the Tesla traders' opinions in our chat. So make sure to put them in the comments down below and we'll see what everyone's guessing. And maybe we'll focus on a few of those. We'll do a poll here on Twitter or YouTube or X as we call it now, I guess. And then we'll find out what everyone thinks for Tesla next week. But yeah, here's where the weekly 20 is. It's 221. And then we've got that 200 sitting below. So that's going to be a pretty big one. I think $200 is going to be massive. You can see the weekly closed under all previouses. So that does show you weakness. But if you're looking for strength this week in Tesla, you're looking to break 252. So if we breach 252, we take out that high, which is kind of like right there, then we should be looking at, some further rallies, you would think. We also have a little gap down, so a little gap up could push us to 252 for dip buyers. You're looking for a gap up on the Monday here for Tesla with stops below the low. Of course, proceed with risk. It's not really an exceptional trade. They're just okay. Speaking of ones that look a lot better towards the negative side, it's AVGO. So AVGO was one we brought up a little while ago over here. And we discussed the idea that we thought that semis and AVGO would weaken over the next 3 to 6 months. Well, we're about 1 and a bit months into it now, and we're well underneath where we thought it would weaken off to. First target was, of course, around that $800, so we're getting closer to that. And I still think, based on what we're seeing on semiconductors, that there could be further weakness in these charts. So if we have a look at SOX, which is just a different version of the semiconductor index, you can see here the double top is present. We can see the selling. We can see possible little bit of reprieve here. But again, there's very thin trade volumes off this. So 441 on SOX is very possible here moving forward. And we'll be watching that closely. Another market that we need to watch and follow is AAPL. This is Apple, of course. And you can see it's sitting on its weekly 20 moving average. It closed slightly underneath, but we'll call it near enough is good enough because it's right on that level. And more importantly, take a look at the 2-hour chart. As we reported at the start of this video, it's just hovering here. Now, we don't know whether it's an accumulation yet or a distribution getting ready for a new sell-off, but be on the lookout for AAPL this week. This is going to be a huge options trade. There's going to be a ton of stuff going on around this, and the longer it coils, the more explosive that action is going to be. Expected explosive action is Disney. Of course, this broke up, then rejected, and it's coming into that buy range for short-term time frame traders. Basically, we're trading between around 86 and 87, 86.50 to 80 kind of 8. And that level there is where you expect these buyers to recommence if they're going to on short-term timeframes. If we take the low out though, next stop 84, next stop 78, 71. So it got a nice reprieve rally, broke through. This is still a pretty good looking trade towards $94. Not too bad on the charts. And it's all about replication. Of course, you've got to proceed with your own risks and everything else that we talk about. CQQQ got smashed. So, of course, we are not looking at this at a short-term time frame trade. This is China and China tech. Everything coming out about this country is negative at the moment, which, of course, is stacking the fear. But the charts seem to have overall bottomed. So I'm just kind of looking at it in this perspective and saying, well, I still think stimulus will come later on this year. I've already said most likely October. So the markets are just going to kind of accumulate or move a position. If you don't believe me, have a look at the technicals of JD, have a look at the technicals of Barber, K-Web, and many others. They're all floating around pretty interesting levels that if you saw them on other stocks, you'd be like, doesn't look too bad. Let's move over to XJO, but of course the news is terrible. The XJO, what's going on there? So of course here we have double topping, and we can see that the market is kind of coming back to that fair level for a turn. The market here in Australia, for any Australian viewers, has been doing a lot better thanks to energy sector and, of course, metals and banks as well being a huge part of it. But yeah, this just so boring. No moves on that yet. We'll report if we see something interesting. At the moment, double top is in play. German market. Now, this would be exactly where, if you were keen enough, which I'm not, but if you were, you would be looking at actually a little buy the dip scenario based on the fact that it took that high last week and it's kind of built a scenario through here. It could also be, of course, a sell, but this would be where the buyers would commence if they were going to. If we go back to the daily, you can kind of see the action looks medium at best. If we get a close underneath 15,821 on the daily, I think we're moving lower. We might be seeing brutal sell-offs across major indices. Possibly we're even moving down to like the 15,500 on the German. And remember here, the German DAX has put in what we believe is a distribution. So it makes sense that it's probably more the bear side, but for bull buyers, they're looking very intensely at that Monday trade. US 2000, middle of nowhere land, looks weak at this stage, rejection wicks, and obviously long leg doji to end the Friday. Qs, interesting, came back to a pretty key level, filled a few gaps last week. We still have more gaps to be filled. In fact, I think that one actually has filled, so I don't know why that's on the chart, but overall, there's some gaps on the way up as well that haven't quite filled. We've got heaps on the way down, and it is a long leg doji, as you can see here. So indecision at this short, some big trades coming in for the S&P 500 in particular. But if we look at the NASDAQ futures, you can see here that there's no turn on the small timeframes yet. So we'll be reporting if we see a small timeframe turn, but it's still a series of lower highs, lower highs, lower lows, lower highs, lower lows the whole way down. And at this stage, the bears are still in control. Let's have a look at the S&P though and see if anything's changed. First up, gap filled. Nice, that's fantastic. We've been looking for that one. This is our first take profit target on the short. This is actually what we were looking for. So we got it. Nice work, guys. It's pretty good. Now what happens though? Well, let's take a look at the weekly. So the weekly did reject a bit. The daily did actually find some buyers. You can see here, gap down and then found buyers filling up. And it's on that 50-day moving average. So you can see here a lot of people. Now, what the bull cases are here is the bottom of the Bollinger. People are looking at it from some kind of trend line. I don't like trend lines. I think they're a bit trash, like these ones that are not obvious. But anyway, a lot of people are drawing a trend line like that. And then we're also seeing 50-day Bollinger, obviously weak, like quite a lot of sell-off, gap fill, etc., etc. So there are some bull case scenarios now that we've hit this level. Let's look at the US 500. You can see here the futures, and I've marked out 4,400 and 43 kind of 20-ish zone as possibles, or 43.50 as possible levels in the future. For small time train traders, what you're looking for next week is probably some kind of close above. The problem is at 44.80. I think it's probably 44.90. And if this happened, I could see some reprieve rally back up into this supply. So I think that's one possibility. The other possibility is the bears kind of push it down straight at 44.80, 44.90, that exact level. If we don't break out, bears push down and they start going towards 4,400. So I like both short-term time frame trades. People like the 15-minute here, so we do it. Stick around if you like this type of stuff, because we're going to do that more often for you. So the short and longer-term time frame stuff. But yeah, at this stage, look, data says down. Maybe this is the week of reprieve into the OPEX. So let's have a look at whether that makes sense. Well, remember we mentioned before 440 and 435. If you take a look at this, maximum pain actually sits right around basically 438. So it makes sense. And 430, look at those puts and calls all over this. It actually makes sense for the market to want to target in 430 at some point this week. And 440 is also a key put level strike. So 450 is the calls. This will be something we watch because remember, there's way more than normal at stake. We've got about 1.8 million plus options expiring. We know that that's a lot of money, and Wall Street like to make a lot of money, so they often do like to keep it within these boundaries. So I'm not sure if we're going to see a hugely volatile week, but what we will see is some interesting wall levels and how they trade off it. So just remember that if we move down, 440 and 430 are the interesting put walls, and 450 is the interesting call wall for this week. Let's move over to Bitcoin. It is really boring on Bitcoin. We have not gone through, but Bitcoin traders should rejoice in one thing. That's a coil. And when the markets break, either 30,450 like we discussed, or the low, we should be moving down to 28. There will be some explosive moves. And I would think that the breakouts for now would be probably true. So yeah, we're trapped in the middle of nowhere land. And at this stage, unfortunately, we don't have much direction on crypto, but we will report back if we see it. For the week ahead, other than big economic earnings reports, we do also have a couple of bank holidays on Tuesday. You can see here some of the news coming out. This is all towards New York time. So we've got here 8:30 a.m. core retail sales. That's going to be a big one, seeing when the demand destruction's there. Now, notice they actually expect a 0.4 rise. So, I'm not sure about that one. What do you think in the comments? And then we go down FOMC meeting minutes, 2 p.m. And then we've got basically that as the main stuff. Unemployment claims as per usual on Thursday and to Friday. So yeah, realistically, it's a pretty normal week. Not too much going on. It's mostly around options expiration. So remember to subscribe and smash that like button if you enjoy our content. And of course, stick around for our content view of this week, which will be all about options. So I'm looking forward to it. And I'm certainly looking forward to seeing some unusually large trades coming through from the big players. Bye for now.